In this video, I want to talk about banks and credit unions. We're going to learn a little bit about what the difference between the two are and which one is better, because there's definitely one of these two that are better. So welcome to Personal Finance today. Let's get started. Okay, we're going to discuss the difference between the two, and we're going to learn a little bit. This is part one of the video. There are going to be two parts on this one. And part one of the video, we'll really talk about the difference between a bank and a credit union. And then part two, we're going to talk about the different types of accounts: checking account, money market account, checking account, or a savings account, that type of thing. So, all right. Just a couple general rules here. Guidelines to go by is I would not carry a debit card with me or a checkbook. And the reason that I don't, I pay with things in cash. Not everything. I'd love to say I'm 100% on this, but the more often that I pay with cash, the less money that I spend. And that's the big thing, is that I really limit what I can buy, because I only can buy the things that I have cash for. Whereas if I carried my debit card, I might have an overdraft protection, or I might have other money that's allotted for something else that I can borrow from today, and I'll pay them back some other time. That gets into a really, really bad habit. So you want to get in the habit of just carrying cash with you. We have an envelope that we use in our family. That's that envelope system we've talked about, where I only have a certain amount of money for groceries, and I put that money in the envelope. And then whenever I go to the grocery store, I take out that envelope, and that's how I pay for it. And it really, really just makes me aware of how I'm spending my money. You know, we've talked before in this class, and we've read different articles on spending more money with plastic, and I totally believe that, and it is true. Let me give you a little scenario here. So we have a pug dog in my family, and the pug dog's name is Charlotte. And this is a picture, or a couple pictures, of Charlotte, right? She's our princess. Well, this is not too long ago. I had a lot going on. I was working long hours, so was my wife. And come to find out that Charlotte ran out of food, right? That morning, we gave her the last little bits of food. And so about halfway through the day or so, my wife called me and said, hey, tonight, in between when you teach at school and whenever you're teaching at the college, will you stop by and get Charlotte some food? Now, I had a very tight time schedule that I could make that. So, of course, I'm wanting to help out. There's nothing wrong there. But so I go to the store, and I'm pressed for time. I've got a lot going on. I didn't plan on this. You know, I've got many things I have to get done still yet that day. And so I'm a little bit anxious when I go in to PetSmart, and I need to purchase food. And let's just think, what does a normal dog food cost? Well, a dog food probably costs somewhere between, I don't know, you could probably get the cheapest one for maybe $10, maybe $30, right? Somewhere in between there, you can probably get what you need. Well, so I went into PetSmart, and the thing I was thinking in my mind was, I'm so busy, I can't afford to give up this amount of time. So I need to just get what I need here so that I don't have to come back. So naturally, then I've got to get the bigger amount of dog food. So instead of the little bag, we ended up getting like one of those 30, 40, 50-pound bags, however, those are the huge ones you got to carry on your shoulders. Well, of course, this is Charlotte, right? So Charlotte doesn't do just one type of food. She has to do the type of food that has like the freeze-dried vegetables mixed in. So we got to get two different types of foods. We got to mix them in. Well, now the problem is these bags are so big, I have to find a container to put it in. Well, the problem with all of this was I didn't have cash with me. So I had to use a debit card. So instead of going into PetSmart and spending $10 to $30 on pets food, on dog food for Charlotte, I ended up spending $150. I kid you not. And it wasn't as if, I was spending on a frivolous thing, but I was going in there. I was like, okay, I need to get one of these big barrels to put it in. I need to get the biggest dog food. Of course, she needs two different kinds of food. And of course, she needs a little snack beforehand. Anyway, I tell you that just to kind of illustrate that, learn from my mistakes and learn from what the studies are telling us. And the studies are telling us when you pay with plastic, you spend a lot more, anywhere from 25 to 30% more when you pay with plastic. So do not carry your debit card or your checkbook with you, okay? All right. So let's talk just a little bit, going back to banking and credit unions. Let's say that you get your dream job, right? You're like, okay, this is the job I've always wanted, and you start working there, right? And not that McDonald's is your dream job. Maybe it is. I don't know. McDonald's is it's like America's #1 first job, right? Anyway, so then it comes time for payday, and everyone's excited about payday. Well, they don't actually pay you cash. What they do is they do a direct deposit. So they'll take your pay and deposit it automatically into your bank and then give you this little pay stub. And on your pay stub, it'll detail how much money is going in, how much you were being paid, how much went to taxes. We've covered taxes in here. That's a lot going to taxes, too much. But anyway, and where each one of your dollars is going, right? Whether it's in your checking account or what it may be. So, okay, let's talk about the difference between a bank and a credit union. So let's talk banks first. A bank is a large institution. You deposit money in there. They do loans. Very, very large. Okay, so you have like your Chase Bank, your Wells Fargo, your Bank of America. These banks are big. All across the United States, pretty much in just about every state. So you can go wherever you want. They do all types of transactions. You can get a loan there. You can have an account, just a checking account there. You can buy stocks and investments there. So this is a bank, right? They kind of pride themselves on a one-stop shop, right? They get everything all in one house. So and they are a business. Like any other business, they're out to make money. They are a for-profit institution. All right, let's talk about a credit union. Credit unions are not for-profit. Isn't that crazy? Their biggest thing is that they want to have a better customer experience and they want to charge you less. So instead of focusing on making more money and earning more in fees, they're worried about, okay, how can we give more money back to our members? They call them members there, account holders. And how can I make it a better experience? And let me just kind of share with you just the difference between the two. And both of these are honest examples. And they seem a little outlandish, but they're like an everyday example that you would have. First, let's talk about banks. So Wells Fargo is one of the big banks, right? And I'm not a fan of banks, and I'm not a fan of them because I don't think that they're out for the best interest of the customer. And Wells Fargo has recently been busted several times for fraud. What they would do is they would open up an account fraudulently. So the managers and the high-ups, if you will, at the bank were applying pressure to like the average everyday teller to open more accounts. And so someone would come in, let's say you would come in and you'd say, hey, I want to deposit this check. And I'd say, okay, yeah, no problem. Would you like to open another checking account? And you say, no, I don't want to. Well, me as the bank teller, Wells Fargo again, I go ahead and open up another bank account, whether you like it or not, and I shift in $60. And that $60 will help pay for all the fees on that account. Okay, so they are fraudulently opening up accounts. And I would love to say that this is just a hypothetical. This is real life. They've got busted on it. Wells Fargo is currently being reprimanded by the government. They cannot grow over a certain size right now because of this. So if you're ever interested, just Google Wells Fargo indictment and see what pops up. I mean, it's all over the place. So that was a couple of years ago, maybe 2 years ago. And they supposedly came in and changed everything. And then just recently it came out that, nope, the same practices are still existing. So they are actively stealing money from their customers on a regular basis. Absolutely absurd. Shift to my personal experience, and I've had similar experiences to that with Bank of America. They appropriated funds so that they could earn more fees, and it was ridiculous. Anyway, let's go to a credit union. I do my business with a credit union. Credit union, when you walk into a credit union, their goal is to know you by name. So when I walk up to my credit union, and I go to the same branch on a regular basis, they know me by name. And they say, hi, Travis, how are you doing today? I don't have to show ID. Of course, if they don't know me, if it's someone new or something, I show ID, of course. But everyone else, they know who I am. And they approached me last week and said, okay, we're going to be transferring to a new checking account. Instead of a choice checking, it's going to be a premier or something, whatever they want to call it. And I said, okay, well, what's the difference? They said, well, on the new one, we're going to pay you a lot higher interest rate for the money that you have with us. Or we're going to give you a rebate back every time you use your debit card. Well, I'm not a big fan of debit cards, right? So I said, okay, well, I'll take the higher yield. So I am earning about 6 times as much interest as I used to earn. And the reason is for that is they were making some money, and they were making a good amount of money, and they're not in business to make money. So when they start making more money, they're a nonprofit, so they just cut the fees that they charge people, or they give more money in interest. and they're about the customer experience. You try to walk into a Wells Fargo or Chase and just deposit money, you have to fill out all these slips beforehand, you have to wait in the line, and it always takes forever. That's not the case at the credit union. They do a really, really good job. The only exception that I would say to this is Desert Schools. I have not been happy with Desert Schools Credit Union. In my opinion, Desert Schools is a wannabe bank. They want to be a bank, and so they do the best they can to treat customers like a bank would treat customers. And they're better than a bank, I will tell you that. But if I have a choice, I do not do business with Desert Schools, and I don't. So I do my business with True West, but I've had it with True West. Let's see, some other ones were Arizona Federal. All of those have been really, really good experiences across the board. So I encourage you at least to explore the opportunity to go to a credit union, okay? And here's a list, and this is just some examples of fees charged, like just this one, online bill payment. With the bank, they're going to charge you $7. That's ridiculous. Credit union, they charge you nothing. Just to have an account with the credit union, nothing. To have an account with the bank, it's anywhere from $5 to $10 per month to keep your account open. They are just killing in fees. Whether it be an overdraft fee, ATM fees, the fees here you will notice almost across the board are all lower for credit unions. So the fees are lower. The customer satisfaction is much higher. Let's talk about that right now. So this is an independent study that was done for specific to customer satisfaction. How happy are you with your organization? So here we go. All credit unions, 85% of people indicated that they are happy with their credit union. Not bad, right? Room for improvement, but still not bad. But when you compare it against the banks, it's a killer. The credit unions are much better. I mean, look at this. We talked about Wells Fargo here. 72%. I still don't know how you have a 72% approval rating. Are you kidding me? They are actively stealing your money and they get a 72% approval rating? No way. No way. But nonetheless, I mean, Bank of America here, and I've had personal experiences with Bank of America. I'm not happy with them. I would not recommend them. They're at a 68% here? 68. Why would I go somewhere else when they've got a 68% approval rating and they're going to charge me a lot more money when I can go to a credit union and they have an 85% approval rating and they're going to charge me a lot less? Are you kidding me? It's a no-brainer, right? Go to a credit union. So anyway, hopefully you found that this video is helpful. If you have any questions, let me know. This is part 1. I'm going to do part 2 of the video here in just a little bit. So you feel free to get into that one. We're going to go into specific types of accounts in part 2.